In this session, we would be dealing with the preparation of a trial balance, and we have a question here, and the question goes like this: prepare the trial balance of XYZ from the following as on 30th March 2020. Okay, so as on 30th March, they have given us the details of some items over here, and they're expecting us to prepare the trial balance. And also, what you have to understand, these details that has been given to us, it is of Mr. XYZ. So we are preparing the trial balance for Mr. XYZ as of now. Okay, so we are preparing the trial balance of Mr. XYZ right now. Now remember, whenever we prepare, when we prepare the trial balance, we will have to prepare it based on. We have to classify, we have to identify the items as assets, expenses, liabilities, or incomes. I'll repeat that. We will have to identify the items as assets, expenses, liabilities, or income. So based on that, we will be going about with the preparation of the trial balance. Okay, so based on that, we will be going about with the preparation of trial balance. So let us prepare the trial balance right now together, and this is typically how a trial balance would look like. Okay, so trial balance, right on top we will be writing trial balance of ABC as on March 2020. So please remember, we are giving a reference that, okay, so the name is incorrect over here in my solution. So this has to be that of XYZ. Okay, this has to be of XYZ. So we are preparing the trial balance of Mr. XYZ. Okay, so in particulars, we would be recording the name of the ledger account, and then depending on whether it's debit or credit, we will be going about writing the amounts over here. Now remember, on the debit side, we will be having assets and expenses. On the credit side, we would be having the liabilities and the incomes. So now let's go about writing down the items one by one. Okay, so let's look at the question. The first item that we have is bank. Okay, the first item that we have is bank. Now what is bank for us, or what does bank signify? Bank signifies cash that we have in the bank. Okay, so cash that we have in the bank. So cash that we have in the bank, please remember, it is an asset for us. Okay, cash that we have in the bank, it is an asset for us. So that will fall on the debit side. Okay, that will fall on the debit side. So some of you have sent me confirmation messages in the chat. I'm very happy. Please continue to do so. But nonetheless, we will be discussing together and then solving it as well. So the next item that we have is bills payable. Okay, the next item that we have is bills payable. What do you mean by bills payable? Bills payable refers to bills that you have to pay off. You bought certain things from some other people. You had bought it with a promise that you will pay it off later. Now it is up to you to pay the money off. You will have to pay the money off. So any guesses where this would be falling? Any guesses? So some of you are already sending me the messages. Yes, it is correct. Bills payable is a liability. Okay, it's a liability. Why is it a liability? Because it's an obligation. It is an obligation. Since it is a liability, remember, liabilities will fall on the credit side. Okay, liabilities will fall on the credit side. So that is bills payable. Okay, that is bills payable. Next item is capital. What is capital? Capital refers to the money that is brought in by the proprietor to start a business. Okay, capital refers to the money that is brought in by the proprietor to start a business. Now, at this point of time, some of you may have a feeling that capital is an asset. Okay, but unfortunately, your assumption is wrong, and I'll tell you why. Capital is brought in by whom? Capital is brought in by the proprietor. So it's proprietor's money. Now, proprietor is giving the money to the business to run itself. Okay, what you have to remember is proprietor is giving this money to the business to run itself. Okay, in other words, it is the proprietor's money. This money has to be given back to him. This money has to be given back to him. So because this money has to be given back to him, remember, it is not an asset. Instead, it is a liability, because when the company goes in for liquidation, this money has to be paid back to the proprietor. Okay, this money has to be paid back to the proprietor. So capital is it is a liability. Next is carriage inward. Okay, next is carriage inward. Now, some of you may have a doubt, what is meant by carriage inward? Okay, so carriage, as all of you know, carriage refers to transportation cost. Okay, carriage refers to transportation cost. Here we are talking about carriage inward. It is coming inside, which means this is the transportation cost of your raw material. Okay, this is the transportation cost of your raw material. So carriage inward is an expense. Carriage inward is an expense. So any expenses, it will fall on the debit side. Okay, it will fall on the debit side. Any expenses, it will fall on the debit side. Okay, so carriage inward is an expense for you. Next item is drawings. What is meant by drawings? Drawings refers to the money taken by the proprietor for personal use. I'll repeat that. Drawings refers to the money that is taken by the proprietor for personal use. So some of you may be under the impression that any guesses where this might fall? Carriage. So some of you are raising hands. Please give me a minute. I would be happy if you can give me a minute to complete off my explanation with regards to this. So drawings, please remember, drawings, it is business's money. Business is giving a loan to the proprietor. Okay, so business is giving a loan to the proprietor. So since business is giving a loan to the proprietor, this is a asset. Okay, this is a asset. So I'll repeat that. Drawings is the proprietor's money. Proprietor is taking this money for his personal use, and then proprietor has to pay this money back to the business, because of which drawings is a asset. Why is it an asset? Because the business would be getting the money back from the proprietor. Okay, business would be getting the money back from the proprietor. So in the meanwhile, someone had raised their hand. I think it was Anina. Anina, did you raise your hand? Anina, can you please confirm if you did you raise your hand? If you have, please raise your hand once again so that we could unmute you. But in the meanwhile, I just want you to remember, drawings is an asset. Now, why is it an asset? It is an asset because proprietor is taking money from the business, and then the money has to be paid back. Okay, so the next item is machinery. Any guesses where machinery will fall? Machinery is an asset. I think that is straightforward. It is understood. So it will fall on the debit side. Okay, so machinery is an asset, and this will fall on the debit side. So this will fall on the debit side. Next is opening stock. What do you mean by opening stock? Opening stock refers to the stock at the beginning of the time interval. Okay, opening stock refers to the stock at the beginning of the time interval. So this opening stock is an asset for you. Opening stock is an asset. So asset, it will fall on the debit side. Next is purchases. So purchases, remember, you're purchasing raw material. Whenever you purchase raw material, that is an expense for you. Okay? Whenever you purchase raw material, that is an expense for you. So expenses will fall again on the debit side. Okay, thank you very much. Some of you are sending the confirmations, and your amounts that your answers are quite correct. I'm very happy. All of you have understood the logic. Next is rent and taxes. Now, rent and taxes, please remember, that is an expense. Since it's an expense, it will fall on the debit side. So this is quite easy. Someone had mentioned rent and taxes on the credit side. I'm afraid it is not. Please remember, rent is an expense. Rent is an expense. There's a difference between expense and a liability. Okay, there's a difference between expense and liability. Expense is something that you have to pay. Liability is an obligation. You haven't paid, you are yet to pay. So there's a difference between expense and liability. Okay, so that is about that. Okay, so rent and taxes, that will fall on debit side. Next is sales. Sales, remember, what do you mean by sales? You are selling goods and then you're generating a revenue. That is an income for you. Okay, so sales is an income and it will fall on the credit side. Next is sundry creditors. Creditors are people to whom you have to pay money, and creditors is a liability. Okay, creditors is a liability. So that will again fall on the credit side. Next is sundry creditors. Sundry debtors. Okay? So creditors are people to whom you have to pay money. Debtors are people who have to pay you money. Okay? Creditors are people to whom you have to pay money. Debtors are people who have to pay you money. So people who have to pay you money, they are your assets. Okay? That is your asset. So that will fall on the debit side. Then you have sundry expenses. Now the word sundry, it means miscellaneous. Okay, the term sundry, it means miscellaneous. So miscellaneous expenses, as the name confirms, it is an expense, and expenses will always fall on the debit side. And then finally you have wages. Wages is again an expense, and this expense will fall on the credit. It will fall on the debit side. So we've got pretty much all the items in place. Now what we have to do is we have to add up the debit with credit to see if it's matching. Okay, we will have to add up the debit with credit to see if it is matching. So I'm just going to quickly, because since I'm doing it virtually, I'm just going to use formula into Excel, and I'm going to be doing this. And if you notice, my debit is equal to my credit. So which means my trial balance has balanced and my debit is equal to my credit. So I have successfully completed the preparation of trial balance for this particular question. So I have completed the trial balance preparation for Mr.